Hi, everyone. Welcome to Now Next Later for Monday, February 23rd. We are happy you're joining us. We're brought to you today by our sponsor, Roku. So let me just say a minute here at the top on Roku, which is, if you're not familiar, a single unified CRM with agentic AI specifically designed for lenders to scale their channels of business. So consumer direct, retail, wholesale, it's an all-in-one system, which means if you have data and contracts spread across 4 or 5 systems, that should actually all be in one, and that is Roku. So thank you, Roku, for sponsoring, and please check out Roku.com if you'd like to see a demo. As always, the last Monday of every month, we have Mike Yu, the CEO and co-founder of Vesta. Last month, we got a chance to kind of set the stage of what is the technology landscape, especially around emerging tech, that vendors and lenders need to be aware of. Today, we want to dig a little bit deeper, the next layer down. And really that is what is happening to the industry's data. You heard me mention it here at the outset with having all your data in one place. Today, actually, we want to talk about where it comes from. How do you get data into the system? Ever since I started in this industry, the big topic was PDFs, right? I think I heard about OCR as a young attorney in 2011. Joining this industry, and we're still talking about PDFs today. And so literally today, Mike, I thought maybe that would be the right place to start. You know, when we think of these platforms, and particularly the one you're building, but also just like best practices, where we're headed, how people should think about this, let's just start with, where does the data come from? Maybe even get into a little bit of what happens to it when we get it here later on. But let's start with that. You know, are we still getting majority PDFs, and how should we think about documents versus data as we jump in here today?
Yeah, I mean, I think unfortunately, I've not been in the industry quite as long as you have, but I've been in it a decade now, and I also have been hearing about we're going to get away from PDFs since I've been here. I think one of the first things I did in 2016 when I first joined Blend was actually my condition of joining was I wanted to own our GSE relationships around day one certainty because I thought it was cool. And I thought that was where the industry was going. Unfortunately, from what I can tell and the data at Vesta, which is, you know, I think probably more on the like forward leaning edge of lenders, it's still mostly PDFs. Okay. Why is that? I think there's probably a bunch of reasons. One is that a bunch of like the data ecosystem is very fragmented to like your comment at the top about 4 or 5 places. Like consumers data is also in 4 or 5 places, right? I've got a bunch of bank accounts. I've got, you know, my payroll provider, which the only reason I know who my payroll provider is right now is because we're in the process of switching at Vesta. So like that's a headache for me. But you've got, you know, like the payroll provider that the employee usually doesn't know, and you've got TurboTax or wherever your tax returns are, and you've got your bank accounts. And you have to remember all these credentials or like figure out how to integrate data from these like 5 or 6 places per person into the mortgage lender. And then compound that with the market's pretty fragmented. There are lots of payroll providers out there. There are lots of banks. And it kind of makes sense that everyone's just like, oh, well, the common easy interchange format is like just like download the PDF and give it to the lender. And so I think there is like really a consumer behavior component even of, yeah, there are like benefits to using source data for the consumer, but I don't think they really understand that. It's like very not obvious. It's purely a convenience play. And I think we just haven't done a good enough job of getting source data that convenient for the consumer. Like what's the most used one? It's the work number. Why? Because the consumer doesn't have to do anything. Right. And so I think we're still seeing mostly PDFs. I think we've been talking about getting away from it for forever, but I think that PDFs are just like the common format everyone understands. And unfortunately, I hate to say it, but like they're also kind of the format that all these legacy pieces of software were designed for. Like, you know, a lot of the software of the 2000s that lenders still use today, those are meant to be like PDF filing cabinets, more than there be these kind of like data engines that are going to go and get like your rich set of data from a Plaid or a Truve or a, you know, TrueWork or any of these guys. And so, no, we still see mostly PDFs. And I think there's like a lot of consumer behavior reasons. There's a lot of lender behavior reasons, but it's been slow.
I want to come back to the legacy software comment in a second, but you made me think of a conversation I had, you know, when I had an innovation role at Rocket. I met with innovators from other industries. And one of the ones that I met with was the head of innovation at Samsung, particularly around the smart house, because that's where it overlapped with Rocket. And her comment always stuck with me. And she said, you have to remember, when I'm designing smart home innovation, I'm competing with the light switch. which is a very simple technology. Like I'm trying to put the light switch, or I'm trying to innovate on the light switch, and people don't really mind because they're so used to it. It's right there. Do you get a sense that PDFs are the light switch, or do you get a sense that there are incentives out there that we're just not tapping into? There is a story there. We just haven't found it yet.
I think it's a good question. I think that in many cases, PDFs are probably the light switch.
Mhm.
And I think that there is a way to build a competitive data ecosystem. Don't get me wrong. Like, I mean, at this point, this is like 9 years ago, so it's probably fine to just like talk about it. It's not like a super secret thing in the industry. But there was a time when early warning systems, the guys who built Zelle and a consortium owned by all these banks, they were trying to do this thing where, you know, you could use a social security number similar to a credit report or to the work number and pull somebody's assets across the consortium. And if they had done that, that would have been amazing, because it really does come down to like, you know, it is just too hard to authenticate to your bank, especially today in today's cybersecurity world, all these things. It's just like, you know, everyone wants 2FA, everyone wants your fingerprint, everyone wants, you know, like 18 secret passcodes. And it makes sense. You know, it's like you actually need a lot of these things now. No, I don't think anyone I know in security thinks like SMS, MFA is still secure. But because it's become so security heavy and complicated, it's actually really hard to say like you're going to log into your bank not on your bank's website. It makes sense. It's like an attack vector for people. But it also means that if you're going to log into your bank on your bank's website, you might as well just download the PDF and upload it, right? And so this like whole credentialed thing, well, it makes a lot of sense from a consumer permissioning and data governance and security standpoint. It makes it really hard to adopt these like data ecosystems for the consumer. And so, yeah, the PDF kind of is the light switch, to your point. And the thing that's easier than light switch is like, you know, everyone wants the motion sensing lights where you just walk in the room, but it's always perfect. You know, it never goes dark when you're like in the shower in the bathroom, and then you're like, oh no, what do I do? So you've got to do a lot of work to get it right. And I actually think, you know, you know, as much as everyone wants to talk about the work number, one thing that they did do really well is they got that kind of right, where the consumer does literally nothing. I mean, they pay a lot for it at the end, but they like do literally nothing. And the question is really like, how can we make it that easy for all of these other data sources that are really fragmented? And until you can do that, I think that you're going to have a really hard time competing with that light switch.
Yeah. So let's focus then on the incentives in that relationship you just mentioned, which is the relationship between legacy software or software generally and lenders. What trends are you seeing in software that we should be thinking about if you're a lender looking across your year, your budget, and you're thinking about some of the things we just talked about? What are you seeing in the trends recently from software that affects how we should make decisions?
Yeah, I think a really good way to think about this, actually, I've been thinking about this a lot because February has been a brutal month for software stocks. And actually, like, I think a really good lens to think about this maybe is like this PDF OCR thing, right? So when we talk about like PDFs, and we've been talking about OCR probably for like 10 years since I've been in the industry, I bet it was another 10 before that. OCR was this thing where it was like really expensive to make work. People had a really hard time making it work. And, you know, you have entire companies who basically trained their own proprietary models to read just like pay stubs or W-2s or whatever. And they spent tens of millions of dollars training these models. And the problem is like, for those guys at least, is now, you know, the ability to read documents and extract data off the page, like what we see at Vesta, is just like orders of magnitude easier, more doc types, more accurate than anything was before. And that's because you have these like guys in San Francisco spending tens of billions of dollars every year, like on researchers, on GPUs, training these huge models. And the models are basically just like intelligence on tap, right? And so what can intelligence on tap do? You send it a purchase contract. It doesn't like try to template and like find the amount and whatever. It actually just like reads the purchase contract. It understands it in some semantic sense and it like spits it out. Like spits out the exact numbers that you want into your LOS. And so what happened to these OCR guys? Like, it's kind of unfortunate. Like if you spent, you know, 30 million bucks training a model in 2018, like that model is now worth probably zero. And that's just kind of like the way that software has evolved. And I think what we saw in February, and I think a thing that like, and so that's, you know, OCR and PDFs. And so like, you should probably be using the models for PDFs as like a very tactical suggestion for lenders there. But I think also for the vendors in the ecosystem, I don't know how many vendors listen to this thing, but I imagine it's not zero. Like I've been worried about this thing, which is then you look at what's happening with software broadly. Like software stocks in February are probably down like 20% on average. Actually, I don't know if people saw this morning, like the security stocks, like Palo Alto Network, CrowdStrike, these guys are down an average of like 5% this morning. What happened? Anthropic released Cloud Code Security on Saturday or whatever. And so it's just like everybody, it's, you know, the OCR companies are kind of like the first harbinger, right? Where like they are getting repriced down because it's like so obvious that this AI is going to replace them. But like everybody in software, I think, is now worried like they're getting repriced down because it's like AI makes this stuff easier to build. Will customers want to build their own? Will like there be more competitors? Will software be more commoditized? I think there's all these things that are kind of like existential to like the questions of software. And on the one hand, it's funny because I sit here and I'm just like pounding my head against the wall all day, which is like everyone's on this legacy, like 1990s or early 2000s system that they don't want to rip out and replace with something new and modern. And on the other hand, the public markets and capital markets are telling me like, oh, Mike, it doesn't matter. Like if you get Vesta installed, there'll be like 1 million Vesta competitors that lenders are looking at switching to in like 2029. And I'm like, these things can't both be true, maybe. But I do think that in general, for like the software vendors who are thinking about this, I think it is like a very real question of like, what is the value you are delivering to the customer in a world where like the value can no longer just be writing code. It's no longer like we built a great product and that's it. And in many ways, like the problems of the industry actually were that like lots of technologists thought the value was just writing code and they'd ship the code over to lenders. And how many times have you and I and Sasha talked about like, it's all in the delivery, it's all in the implementation, it's all in the transformation. I think that just becomes like doubly and triply true. And so for like the vendors out there, I think it's going to be so much more of, and this might have to change pricing models, this might have to change business models, so much more of the value that we're going to be able to deliver for our lenders, for our customers over the next couple of years is really how do we help them transform their businesses in this new world of AI? How do we help them leverage it? How do we help them, whether it's get away from PDFs or actually change their processes to read the PDFs or make their architecture more data-driven or leverage AI to do like all their back office work or whatever it may be. I think so much of being a software company now, I joke that like now Vesta has to become Mortgage Palantir, not Mortgage Salesforce sometimes. It's like you really do have to like forward deploy and like teach these customers and transform their businesses and their processes with AI. And it's no longer enough to just write the code and ship it over. It was probably never enough in this industry. But I think what the public markets are telling us right now with Anthropic kind of saying like, hey, it's way easier to write code than it was a year ago, is that it's not going to be enough for anybody. And so I think that that's like, I'm not really sure how I got on this tangent, but I think it really is like what I've been thinking about a lot is how do we invest even more in like supporting our customers with people, like delivery and transformation and giving our implementations teams the AI tooling to make that really successful. But it is like a lot of these companies are going to look more like services companies because they have to, because that's what customers want. And because like writing the code is no longer the secret sauce that nobody else has.
Well, I think we should dig into the practical results of two things that you mentioned. So this is, I think, really helpful. We do have technology companies that watch this show, and they must be thinking about all of the security and compliance they did, all of the data privacy that falls as subpoints underneath that. And so maybe it just would be helpful for a minute here if we talked about what I understand to be Claude's approach, specifically Claude. It's going to end up being more than just that, but specifically that one, which is you actually do have a relationship, I think, and you'll know better, you can tell us, between Claude and the cloud providers such that you're actually getting your version in your, whatever it is, AWS environment, let's say as an example, and you're actually getting Claude code inside your AWS instance in a way that protects you from A, anyone else getting benefits of your insights, but then B, keeping it aligned with all of the governance that you've put in place over the last however many years. Is that the right way for lenders to be thinking about this? Because we're going to talk a lot about point number 2, which is the relationship between like a CTO at a lender and the provider, this services provider. But before we get there, talk just a little practically about, does anyone have anything to worry about when they do jump inside of a Claude to solve their problem?
Yeah, I'm gonna be honest. Like you always should diligence your counterparties and all this stuff. Amazon does have a Bedrock setup where basically it like stays in, all the data stays inside your AWS and all that good stuff as well. But the practical thing I often tell lenders is like, when in like 2024, like early 2024, when I was trying to get lenders to use OpenAI to read the docs, they were like, "Ooh, we don't know if we trust OpenAI." Fortunately, that objection is basically entirely gone. But what I would remind them is like, all right, so typically these guys are using some existing mortgage OCR vendor if they're using one. And that mortgage OCR vendor includes like they will run it on their infrastructure, which is probably not as secure as OpenAI's. It's like OpenAI has the state of China trying to get into OpenAI every day to get the weights. Like this is actually like a U.S. government state level secret now. Is like what are the weights of GPT-5.3? And they're like I can't opine on how good they are at keeping them out, but they seem to be like at least okay based on like the current state of Chinese open source models. And so they're keeping them out. And it's like, at the same time, you're sending your data to some like OCR provider that's like mortgage specific that spends way less on security. And half the time, those guys have human in the loop where they're like taking the W-2 with the borrower social, they're putting it in front of like somebody offshore, and the person's like typing it in and it comes back. It's like, are you really going to tell me that OpenAI is like the security hole that you're worried about in your entire, operation and chain? And so I don't know. I think that like, of course, you should always diligence your counterparties. I just think that like OpenAI and Anthropic are probably two of the safest places to be right now. It's kind of like, it's very similar to when lenders were first moving to the cloud and they were all worried like, oh, like, do I trust AWS more than I trust my data center? I'm like, you definitely should trust AWS more than you trust your data center. Like they do this all day. So yeah, I mean, you do from a Claude standpoint, like Amazon does have this Bedrock thing. You get a slightly outdated version of the Claude model. I mean, they serve like, the federal government. Like some of that stuff is like FedRAMP certified, like, your Palantirs, a lot of your departments. I don't know if DoD can use it. I think DoD is like requires air gapped or something. But a lot of, like government institutions can use Claude now because they're doing it on Amazon Bedrock. So there are definitely like very compliant and secure ways to serve this thing. I also just think that like when you're looking at security and compliance, like so much of your risk as a lender or vendor are like your own people, their social engineering. It's just like, you should always do your diligence, but those are the wrong things probably to hold you back from that set of capabilities.
Right on. So let's talk then about the right things to drive you towards these capabilities. So you mentioned how the internal tech team at a lender is making sort of a transformation decision. What does our process of transformation look like? CEO, board, shareholders are telling us this is what we need to do. And they're now starting to think, as you just laid out, or they will be starting to think very quickly over the next few weeks and months, that I need a partner who can actually understand each iteration, each release even of what's happening right now and walk my company through that. How do you see that playing out? What responsibilities on both sides? How do I start that process? Obviously, post selection of the partner, but let's assume for a second you've selected the partner. What should that look like?
Yeah, I think the big thing really is you need to combine domain expertise with like somebody who is plugged into the AI and using all these tools. And the nice thing, by the way, is I will say like in domain expertise, we should all feel like we have some advantage, hopefully, because domain expertise, people have been building in the mortgage industry for 30, 40 years. And that's like, and having a lot of years of experience, having seen the crises and things like that, like I think there's value in that. On the flip side, nobody really has more than like 3 years of AI expertise in like, the current generation of transformer architectures. Okay, there are a handful of people who do. Those people cost like, $100 million a year, and you're not going to have them. But like very few people actually have that. And so it is actually probably, I feel like I used to have this debate with mortgage people all the time where they were like, oh, is it easier to take a mortgage person and teach them technology or technologist and teach them mortgage? And like, I think 10 years ago, probably I would have argued it's like easier to take technologists and teach them mortgage. Probably actually today, it makes more sense to take like some of these mortgage people and teach them AI. And I think actually the best, vendors and partners will actually figure out how to do that. Like, if you're a mortgage person who wants to learn AI and work at Vesta and help transform these lenders, like someone should hit me up. But I do think that is probably a lot of the shape of where this is going to go. I think there are a few things that lenders very tactically need to be doing. One is they just need to be playing with this stuff. Like, I think that we talked about it last time. I'll probably just talk about it every month for like the rest of the year. It really just is like, you've got to be getting into like get a free Claude AI account and go to capabilities and say like, I won't use your skill creator skill to make a skill. Like you just like, it's like Claude settings, capabilities, like, and then you just hit like add new and write one with Claude and just like start to explore and see what it can do there. Like that's the new like hot thing in AI these days. And I think there have been lots of like iterations of it in the past. But this like iteration from the last couple of months is just like the thing that I think is, everyone is kind of clicking on and taking off. And that's like, can you personalize this AI to do some of your workflows better, easier, faster? But you've got to just be like playing with the stuff as an executive. Like I think every time I talk to a mortgage executive and they're like, how can I like get some AI consultant? Can you be an AI advisor for me? Like all this stuff. I'm like, how many hours a day do you spend using like ChatGPT or Claude? It's like, should probably be at least half an hour, And so I think very tactically, like you have to have the baseline as the executive to understand how your business is going to transform. You have to at least have like a fuzzy sense of where the edges of the models are. For what does the actual partnership look like? I think you, of course, need to pick a partner who you feel understands the domain and just like has a team of people that they will just like forward deploy into you that will like teach you to use the AI. I think this is really hard. I think that like, the joke in Silicon Valley right now is like every single person working in Silicon Valley could just make like tens of millions of dollars a year. Not like literally all of them, but like all the like really good AI people. just by like going and like doing these consulting projects for people, but like it doesn't scale that well, like if I were to say I'm going to do like mortgage consulting, like I can only do what, like 4 projects, and then that's like you're out of hours in the day.
Yep.
And so I think that you need to find like who actually is like really investing in this like services and this transformation, and probably like the pricing should reflect that. Like people should be willing to get paid only on outcomes, because AI stuff is so good they have to be able to like achieve the outcomes. And then honestly, I think you really have to like listen a lot to the partner. Like I think that is probably the problem that lenders have the most, which is like there is such a tendency to say like, well, you're some outsider, you don't understand why we do this way. There's lots of historical baggage, etc. And so like we're just gonna, the number of people in this industry who have like brought in consultants and paid them a ton of money and then just like not done anything that they suggested is like very large. And I think that there was like lots of valid reasons to do that in the past. Like there was a lot of historical context, et cetera, et cetera. But AI, and this is why it's so important to play with it for 30 minutes a day so that you understand this. AI is such a big phase shift. It is such a change in what is possible that it is actually, the new capabilities may be worth more than the historical context. And you probably could not have said that like 10 years ago about technology. Like capabilities were like moving pretty slowly. And so like, your historical context probably meant more. But very similar to how I'm like, 10 years ago, I would have said a technologist, it's easier to teach them mortgage than teach a mortgage person technology, because technology is moving so slowly. Now tech is moving so quickly, like your rate of knowledge usefulness like declines so fast. I think it's easier to take a mortgage person and teach them AI. I think that flip is true. And I also think the flip is true, which is like the stuff you used to do at your shop probably is like way less important. And like the reasons you made those decisions are way less important than the new capabilities today. And it's like a very interesting, very dynamic time. And everyone's got to rethink their business models. You can probably tell from my like random, aside 10 minutes ago, like I'm rethinking our business model. I think it really does have to be about, being extremely open-minded to trying the capabilities, everyone listening should go make a Claude skill and just like even see what that feels like. Using these things for 30 minutes a day and like really having an understanding of like how groundbreaking it is. And then being willing to listen to people and like really make big changes, because the people who make big changes now are going to be, I think, really happy. And the people who do not are going to think it's fine until it's not.
Yeah, I think the kind of wave of software success, and maybe SaaS, I mean, you would know better the categories, but the wave of SaaS success that seemed to occur created 2 things that I think the mortgage industry had to understand and absorb from this delivery perspective. One, product manager and product owner, it took on a new definition in our industry because of the definition it had in software, because of the definition it had in tech. 2, tech took on this customer success role, which is just like a new version of a role that probably already existed. It was probably called implementation manager in the 90s, became customer success. So you had customer success people talking to product owners, product managers to a degree. Are the same people still talking to each other just about new and exciting things, or are there actual new ways in which these organizations are going to connect?
Oh, now you're asking. If I knew the answer to that question, Jeremy, I would be way richer than I am. I think it's like my current best guess is that it will be the same people talking about different things, or the same roles talking about different things. And I think some of the people will adapt and some of them won't. Like, I think we look for like probably a slightly different profile in a lot of our hiring than we did a year ago, which is like, now I care more about domain expertise because I can actually use AI to supercharge a bunch of people. And the reality also is like, it's much easier for us to hire from the industry. They're much more passionate about the problem. They're much more excited to work at Vesta. They think that, this is like such a cool and like transformational company. And, like the OpenAI guys look at Vesta and they're like, oh yeah, they're doing mortgage. Like they're like old, which is fine. And so I think that like we've definitely shifted our hiring profile. The roles are the same, like ostensibly, like the JDs are the same. The hiring loops actually changed, right? Like we interview much more now for like, how do you use AI? Like, how do you think about AI? Like how mentally plastic are you and how like quickly do you learn? Like that stuff all matters more in this world. So probably some of the people will change. I'm not sure if the roles will change. I think that the roles are like, if you made me guess, it makes sense for the roles to change, but I would have to probably spend some like serious time thinking about it to have a better answer for you.
Well, no, I appreciate that. That's why we have these conversations, and that's what we can talk about as the year progresses. I think I'd like to end here in the last few minutes on what you mentioned about outcome-based. And let's think ahead a little bit of, let's imagine having this conversation in the next 6 months from now. And the way things are moving, that's probably a reasonable actual measure at this point. Can you just talk a little bit more about what you've been thinking about in terms of outcome-based structures and how we would start to move in that direction as partners to get a success-based, outcome-based mindset in place?
Yeah, so there's lots of things that like people are talking about these days in AI. So for example, like Sierra, like Brett Taylor at Sierra, which is a big like customer support agent, like it basically automates your customer support team, talks a lot about this. But I actually think that lots of companies in AI are now innovating on the pricing model, which is because so much of the job is like this consulting and transformation. The traditional way to do this is like I would go to a Vesta customer and I would say like, to use my LOS costs X dollars alone. To use my AI agents costs Y dollars alone. And then to implement it costs like some big Z dollars. And that's like fine, whatever. But one problem with that is actually, in many cases in this industry, you pay X plus Y plus Z, and then you're like, oh, my costs are the same. And why is that? You maybe didn't have enough incentive alignment, and also maybe just like the technology wasn't good enough, and maybe you didn't give the implementations people enough control. But I think in this new model of the world, we're having conversations with some big lenders about like, look, we still need X dollars per loan for the LOS because there's like some market thing, you're already paying that, whatever. But rather than charging you Y and Z for the AI agents and for the implementations, we'll actually give you all the implementation stuff for free. We'll give you the agent for free. But in return, it's like if you save, $600, you'll pay us $200 for that.
Mm-hmm.
Or if you spend $6,000 loan right now and we save you $6,000, you'll pay us $2,000 for that, which is like kind of no one I know actually has like gotten to those numbers. But I think that it really is like, because what that does is that incentivizes us to throw unlimited tokens at the problem, roughly speaking, unlimited people at the problem, like really whatever it takes to like move the needle and achieve the outcomes. And of course, it forces the partner, like it's a good kind of test when a partner comes in and you ask them like to price this way, because it asks like, are they willing to stand behind their product? Are they willing to stand behind their ability to transform your business? And it makes them kind of like upfront tell you what they need to be successful, which is like, there are definitely projects where I would never agree to those things because you like talk to the team and you're like, you're never going to change. Like I will implement everything. And I know you don't want to let go of a single person and you're not planning on growing. Like there's no way for me to make money here. And so it actually forces these also like much more honest conversations up front because now I have skin in the game. And so I think this is a lot of the reason that AI is moving this direction, because I think actually so much more of the value is not just giving you the AI product. It's actually doing the transformation, helping with the process change, doing the consulting and teaching you, like retraining your people even. Like all of those things are things that historically SaaS vendors are not incentivized to do because they take their piece per loan and they walk away. But if you're getting paid on outcomes, it actually like is totally ROI positive maybe for me to take some like mortgage analysts that I've trained up on AI and drop them in and have them retrain your whole team. And so I think that like incentive alignment is a thing that people are getting more and more interested in, especially in this like very dynamic world where honestly, no one is really sure where the value is going to accrue. Like there is value to be had, but is the value created by doing the consulting or building the software? I think it's like, nobody's 100% sure, as evidenced by like this repricing of software stocks. Like at least some people think it will be less in the software than it was, a year ago. But I think that it's a very interesting time and it's a very dynamic time. And I think if you find the right partner, figuring out how to like really align incentives and be outcomes based is like an interesting thing for people to at least consider, both on the vendor and lender side.
Yeah, absolutely. I think that's a great point. I think just a few months ago, I was talking about whether you should access these powerful AI tools through platforms you're already under contract with, or find a new provider to solve the problem you've identified. And now what you're saying is, I think we've already cycled past that to some degree, even in the last 90 days, which is to say, this is going to shift the expertise to where the expertise should lie and really lean into the domain knowledge that you mentioned. And if you find that partner with that mix, you can actually create and implement and then iterate more quickly than ever before. And that'll change the dynamics of the whole relationship. It should also change the dynamics of your business. And so then we could, a year from now, be having a real conversation of who measured the most savings, who measured the most results, which honestly, to this day, we're really just measuring how much more you spent, how slowly your costs grew versus measuring that actual differentiator. And so that'll be really interesting to see.
Yeah, although I will say, Palantir had Foundry, like their platform that they resold. Like at Vesta, we're doing this. I still don't know how to like sell somebody really good AI transformation on top of the old legacy systems. Like right. There are some basic requirements, but if I had to guess, there will be other platforms that also emerge in the next few years that may be viable to do something like this. But I think a lot of the value is actually going to go into the transformation. And it's going to be like, can you build the team that helps the lender really transform on top of the new platform? Otherwise, all you've done is a platform switch, and I think you haven't unlocked all of the value that's there. But I do think the platform switch is probably necessary, but not sufficient if you are on something old.
Yeah. Well, on that note, Mike, we got to end for today. Thank you, everybody, for joining us. Thank you again for Relku for sponsoring. So please reach out to Relku and get that demo that I mentioned. And we'll be back next week. Sasha will be back. Eric Lappin will be here, and we'll have a guest talking about Avalanche and blockchain. So looking forward to that. So Mike, thanks again. And everyone, talk to you again soon.
Great to see you, Jeremy.